Hey, you guys, Trisha Turner here. It's Tuesday. It's 12 o'clock Central. This is Anything But Average Achieving Success in Life. I have had a black eye. If y'all notice, I'm just going to put this disclaimer out there right away. So I've been like trying to stay off of Facebook for last week, and so it's almost gone. So if it looks like I have a tint to my eye, I still do a little bit. But I'm here with my friend Daniel Blue here today. He is going to educate you guys on how to build wealth, how to create a real estate portfolio, and he's going to probably tell you stuff that you've never even heard before. I got introduced to him about a year ago and was just like, holy crap, this guy is so smart. And the things that he encourages you to do and will guide you to do are things that the normal people don't think of. So, number one, thank you for being here, Daniel.
Hey, Trisha, thank you for the introduction and happy
Yeah.
to be here.
Yeah. So let's give everybody a little bit of backstory, like what you do for a living, where you are in the world, and kind of what brought you to where you are today.
Yeah, so basically the problem that we solve in the marketplace is helping people tap into their IRAs and 401ks penalty and tax free. Most people have this thought process when they have a retirement account that money is locked up. That money is not money they can access until they're old and retired.
Mhm.
And if they're lucky enough to touch the money and use the money, they've got to pay a bunch of penalties and taxes to the IRS. Well, that's not necessarily true. There are some IRS approved strategies that allow you to actually take money out of the retirement account before you retire, penalty and tax free, and use that money in a bunch of different cool ways. Maybe you want to use the money to fund a business, right? A lot of our customers use their retirement accounts to fund their business, start their business. A lot of times they use the money, like you said, invest in real estate, maybe invest in crypto, private businesses, maybe pay off high interest rate credit card debt. There's a lot of
Yep.
people that have 25% interest rate credit card debt, and it's hard to win when you've got that much credit card debt and that much in interest, right? So there's a lot of different strategies that are out there. It's just a matter of most financial advisors and CPAs, they're not teaching people these strategies, and this is all public information. Again, it's IRS approved. So what I'm going to talk about here today isn't something brand new. It's been around for a long time. It's just a lack of awareness that's in the marketplace, and that's where our company comes in and teaching people how this works. We've got customers in all 50 states. We're based in Las Vegas. My company is called Quest Education, and how I got here today is certainly a lot of luck. I'm just going to be very very direct. I'm a college
I don't
dropout.
think that. He's smart
Um,
as crap, y'all.
well, I do think there is a level to luck. However, you can't just sit on your couch and do nothing and luck finds you, right? Like you need to take action and make certain choices, and work really hard to have luck actually lead to results, right? But I'm a college dropout. It's not like I was born with a ton of money. My family wasn't rich. We weren't dirt poor, middle class growing up in California. And my life really changed when I was 12 years old. My parents got divorced and my dad moved to Mexico. And that broke my heart because my dad was like my best friend, my soccer coach. We were
Wow.
really close. And now it's just my mom and I. And I'm a teenager and I'm struggling finding myself. And I start hanging around the wrong people and making bad choices and really struggling and getting on drugs and ditching school. And my mom makes the choice to send me to a small town in St. George. It's called St. George, Utah. And this is a town that I only knew one person, one family, and I got to live with them. And I finished my senior year of high school. So that was a big move. I'm going to talk a couple times about environment, right? Your environment changes so much. It can either hurt you and help you. And at that time, it helped me because I was able to be in a new environment and go from getting F's in school to not graduating to actually graduating high school. But I was still lost. I still didn't forgive my dad, and I still had a lot of demons that I was battling, and ended up turning to drugs at 18 years old. Hardcore drugs is Oxycontin. Got addicted to
Oh, yeah.
pills from 18 to 20 years old, and I found sales. Sales was something I've been involved with since I was 18 years old. So to kind of circle back around, how I got here today is having people in my life, having mentors, overcoming addiction. I have a lot of respect for people that have overcame, cigarettes, alcohol. There's all types of addiction out there, right?
Oh,
And
yeah.
takes a certain level of grit and mental strength and sales has been key. I didn't grow up with business owners in my family. I don't have a college degree. So sales is something that, I use every day in my business. I'm not the smartest when it comes to operations and processes and systems. That's why, delegation and having a team is so important. You can only
Yep.
go so far alone.
Yeah.
So all those ingredients is how I got to where I am today.
So I know one of the things that you and I've talked about, of course, is like old school mentality. Like when I grew up, my dad was always like, save for a rainy day and, you invest in the IRA and put as much money as you can in the IRA every year and then leave it alone. Don't touch it. Don't touch it. Don't touch it. And then when you're in your 60s or 62, whatever it is, you'll have your retirement there and then you should have a nest egg. That should always be your goal. And I believe that's how my dad lived. He lived until he was like 86 years old. He passed away from COVID, but that was his mentality, old school all the way. And so I have an IRA naturally. And so that's kind of been that mindset of mine. I never really thought, well, what can I do with this IRA? Because I had that drilled into me forever that you don't touch it. You keep putting money in it every year and you never touch it. And it wasn't until I talked to you that you're like, hold on a second. Like you can totally put this to work and start using it tax free without penalties. So I want to let's go there a little bit because people don't understand that. And a lot of people have that old school mentality.
Yeah, so two things come to my mind about your dad and what you're describing. One, a lot of people are hesitant to touch the money because of penalties and taxes, right? That's a
Yep.
lot of money. If we
Yeah.
do the math together, if you've got $50,000 and you withdrew $20,000 and you're under 59 and a half years of age, you're most likely going to get hit with taxes and penalties. And you're talking 30%, maybe
Yep.
40% in penalties and taxes. So on $20,000, if you withdrew that, you're going to be losing $5,000 to $6,000 to the IRS and penalties and taxes. It's a lot of money to give up, right? So
Yeah.
that's a big reason why people like your dad are like, don't touch the money, like don't give up that money to the IRS if you don't have to, right? So that's number
Right.
one. Number two is opportunity cost, right? So if we withdraw money from our IRA or 401k, now that money is no longer working in the stock market, right? And the stock market historically, just if you just Google, stock market historic rate of return, I think it's anywhere from like 7 to 9% a year through the
Mhm.
ups and the downs, right? So if
Yep.
you're taking that money out, now you're losing out on an opportunity for compound interest and for that money to grow. So there is an argument to be had there. However, there's a lot of people, and it's hard to argue with this other point where they're like, you know what? If I'm making 7 to 9% a year with my money, but my credit card debt is costing me 25%, I'm losing money faster than I'm making money, right? So why not take this money where I'm losing 7 to 9%, or I'm making 7 to 9% a year with my investments, and use that same money to pay off debt that's costing me 25%. And then if there's a way to do that, and you're no longer having to pay the banks and you're just paying your retirement account back, the same money you took out, you're paying it back. Now you're replenishing your retirement account so you're not robbing from your future. So
Yeah.
there's a play there to be had if you have high interest rate credit card debt. Another train of thought is there's tons of people out there that will use their retirement account to fund a business. They're
Yeah.
thinking, well, shoot, if I'm making 7 to 9% a year with the stock market, I know if I start this online business, or if I already have this business model, I'm making more of a return. I just need capital. Let me just use my own money to fund my business.
Yeah.
I would rather use my own money to fund my business than have my own money be invested in the stock market with somebody else's business, right? Or maybe someone like you're like, well, 7 to 9% a year in the stock market, that's cool, but I've got these Airbnbs, or I've got, this private lending, or I've got, these rental properties that make more than that. So I'd rather use my retirement account to invest into these real estate assets, right? So that's why I love, what we do, and the power of, the solo 401k or a self-directed IRA is you've got all these different investment options where the old school is don't touch your money, leave it in the stock market. And I'm not here to beat up the stock market in any way, shape, or form. However, it's nice to have other options. It's just
Yeah.
we need to be aware of those other options.
So I want to do like a hypothetical thing. Suppose somebody had $100,000 in an IRA and they've had this old school mentality that don't touch it until you're 62 or whatever to avoid penalties. What would you recommend somebody do with that? Let's talk
Well,
about that.
Yeah, so number one, I'm not a financial advisor, so I'm not here to give financial advice or sell investments. Our company sells solutions. That's how I like to phrase it. So one, I always like to start from a foundation, from a baseline. Okay. First question I would ask, or one of the first few questions is, what does your debt situation look like? Like, there's a lot of people out there, and whether it's in the comments and social media or friends or friends of friends, are like, "Man, I got $20,000. Like, I want to invest it. What should I invest it in?" Okay,
Yeah.
that's cool, but what's your debt situation look like? And then you find out that they've got, credit card debt, $20,000 at 20% interest, and their credit score is 650. It's like, before thinking about taking that 20,000 and buying Dogecoin, like, why don't you pay off that high interest rate credit card debt, or at least pay it down, get your credit score up? Credit score is massive, right?
It's
Like, that's
huge.
how I just was able to refinance my house and
Yep.
save tens of thousands of dollars in interest over the course of the loan,
Oh
right?
yeah.
That's how I can have a bunch of 0% credit cards at my disposal, because I
Yep.
have a good credit score. And that's because my utilization rates, my credit card debt, is in a good spot. So before thinking about, okay, I've got $100,000, what should I do? It's always good to just take a step back and look at that baseline. And now let's assume that baseline, that foundation, solid, right? Credit score is good. There's really no debt that's costing money. And one thing I'll be clear is, there's a difference between good debt and bad debt, right?
Yeah.
Like, if you've got debt that's only costing you maybe 4, 5, 6%, and that money is being used to make money, that's a different conversation than someone that's got credit card debt at 20%, and that debt is a liability. That debt is
Yeah.
actually not making the money, right? So let's just assume they don't have any bad debt. Well, now it's a matter of preference. It's a matter of risk tolerance. It's a matter of goals, right? Some people aren't a big fan of the stock market. There's a lot of people right now that are like, man, I'm not a fan of the stock market right now.
Yeah.
Like, I remember 2008. I remember 2000, right? Like, we're due for a correction in the market. I really like this crypto play, or I really like real estate, or there's a private company, there's a franchise that I can invest my money in. I'd rather invest into this private business that I know more about than the
Yep.
stock market. So that's where some of those personal preferences come in terms of what you would want to do with that $100,000. Or maybe you have your own business, and you could just use some capital, or you want to start a business. You're working a 9 to 5, or you're hustling, selling real estate right now, and there's this maybe e-commerce business that you want to get into, but you just need $20,000 to buy the product or for the marketing, and you don't want to get into debt to do that. You can use a retirement account to fund that play as an option.
So how does somebody go about doing something like that without penalties and interest?
So the type of account that we help people out with the most is called a solo 401k. If you're listening to this and you have heard of a self-directed retirement account, you probably have heard of a self-directed IRA. Like, that's probably that's the most common self-directed account. Self-directed just means you can invest your money wherever you want. You can invest it in the precious metals and crypto and real estate and private businesses and things of that nature, right? Just think of investments outside the stock market.
Okay.
That's a self-directed retirement account. The account that we talk a lot about, that we help a lot of people with, is the solo 401k. This is just another type of self-directed retirement account. The solo 401k, you can invest in crypto, real estate, precious metals, private businesses, all the same things as a self-directed IRA. The difference is there's a loan feature on this plan, where you actually can be your own bank. You can take a certain amount of money, penalty and tax free, and use that money however you want. Because self-directed accounts, they do have what are called prohibited transactions. There's a self-directed IRA that cannot be used to invest into a property that you live in, for example.
Okay.
That's
Good
a
to know.
prohibited transaction. However, with the solo 401k, there's a loan feature. And with the loan feature, when you take the money out of the account, penalty and tax free, there's no prohibited transaction rules that you have to play by. You can use the
Nice.
money however you want. If you want to use it towards a down payment for a property that you're going to live in, cool, you can do that. If you want to use it to fund a business that you 100% own, that's not a prohibited transaction. If you want to use it to pay off credit card debt, you can do that too. So the loan feature applies for the solo 401k. It does not apply for the self-directed IRA. However,
Okay.
the solo 401k is only for entrepreneurs. So maybe you're a real estate agent right now and you've got 1099 income. Maybe you got
Yeah.
an LLC or some kind of sole proprietorship. there's no W-2 employees in the picture, it's just you qualify for the solo 401k. So if you've got some kind of business activity, some kind of side hustle going on, and there's not any W-2 employees in the picture, you qualify for the solo 401k, and you could take a 401k from an old job or an IRA and get that moved into a solo 401k without paying penalties and taxes. And now you've got the money in the vehicle, the solo 401k, and you can do some of the things that I just described.
I love that. So before even talking to you, of course, I never thought of doing stuff like that. Now, whenever I'm thinking about making a move, or like me, I've told everybody we're buying a building in 2022. That's the next thing. We need a building. We've outgrown this. We're throwing money away renting this space where we've been for 5 years. Now we need to buy a building. So when I talk about that kind of stuff, instead of going and borrowing money and then putting it with what I have my IRA. So talk to me about limits and restrictions as far as how much you can pull out or borrow.
Yeah, so for the loan feature, you can borrow 50% of the account value or
Okay.
$50,000, whichever
So
number is
50,000 is the max.
correct. So if you've got
Okay.
150, 50,000 is the max. If you've
Okay.
got 70,000, 35,000 is the max. And then
Okay.
it's a 5-year loan. So you've got 5 years to pay your account back. As long as you pay it back within 5 years, there's no penalties and taxes. And then the IRS does require an interest rate on the loan, even though it's your own money. I know it sounds silly. They do
Yes.
require an interest rate. The interest rate is calculated at prime plus 1 to 2%. So right now we're telling people that the interest rate's about 5.25%. That
Okay.
interest is fixed and the interest goes back to your retirement account. So that's the cool
Okay.
part is you're not paying anyone else the interest but yourself. So your solo 401k receives the interest.
So with the balance due in 5 years, do you have to do a monthly payment, or what if you didn't do any payments for 4 years and then that last year you just did like balloon payments? Can you
At
do
a
that?
minimum, you have to do quarterly payments. So you can
Quarterly.
miss a month to what you just said, to your point, you just can't miss more than a quarter.
Okay. So for people out there, like right now, the real estate market, of course, nationwide is on fire. And if you look at all the reports for like multifamily, that stuff is like here in Houston, especially these investors that we're working with, like we can't find enough properties for them. There's people buying up all the multifamily because of this housing inventory shortage that we're in. Rents have skyrocketed. And in 2022, they're projected to go up even more. So it's like, this is a game changer. If you're not involved in multifamily, you need to get involved in it. It's like people are waiting for some kind of a crash to come. It's not coming. So stop waiting for that and talk to Daniel where you can pull half your IRA out or 50,000 up to 50,000 and go do something in real estate. Because in my opinion, that's kind of like the safest thing. However, there's a lot of people here in my office are talking about crypto. So I want to kind of get your thoughts on that. What do you think about that?
Yeah, it's I'm not sophisticated enough to say, hey, this is a great coin or that's a great coin. I just the limited knowledge I do have, I do see a future in the technology. So, I like I don't even know if the right word is a safe side of crypto, but Bitcoin, Ethereum, I think it's hard to go wrong in those. Just long term is how I'm looking at it, right? Like I'm not buying crypto to make a 20% return by next month so I can sell it. I'm looking at the big picture. I think there's a runway there in terms of the technology in itself. It's pretty crazy to think like there's hundreds, maybe thousands of these different coins and they just keep popping up, right? So it's wild out there.
It is wild. It's
Yeah, we
moving really fast. It's like I don't even understand half that crap.
Yeah, I'm with you there, and it's just a lot, right? It's a lot to pay
Yes.
attention to, especially when you're, I'm running a business, and I'm building a team, employees, clients, just balancing everything out to just
Yeah.
study all these different coins. I've studied enough to have some belief, and again, I'm not giving financial advice, but just my personal opinion. I think there's room to grow. Big picture, long term, over the next year, 5 years, 10 years, when it comes to Bitcoin and Ethereum. We just landed a deal within our ecosystem where people that have solo 401ks and self-directed IRAs can actually hold crypto inside of the account. So they can purchase Bitcoin, Ethereum, in 13 other different types of crypto within their retirement account. And that's awesome, because if you have crypto right now, you're probably not doing it inside of a retirement account. And
No.
what that means is when you buy the crypto and then you sell the crypto, you're creating a taxable event. Maybe you bought, Dogecoin, you bought $1,000 worth of it, and now it's worth 20,000. If you sold, now you're creating a massive tax event, right? Now you're having to deal with, taxes and getting with your CPA. If you made that same play inside of a solo 401k with us, for example, and you had that same number, that same play take place, there's no taxable event. That 20,000, you're not having to report that as income, because it's inside of a retirement account. So now you can just take that 20,000 and do it again, and you're not
Yeah.
having to worry about paying, a bunch of taxes, right? So a lot of people should look at the idea of having crypto inside of a retirement account as an option, because crypto, again, it's just another asset class, right? Like, not that
Yes.
there's anything wrong or right with stocks, not that there's anything wrong or right with real estate. They all have pros and cons. Crypto is just another option that you've got on the menu.
So for someone that's young, 22, 23 years old, just now starting to think about an IRA, and you're talking about crypto, what would you tell them? What kind of best practices could be? I'm thinking of my son, of course.
Yeah, I would Roth IRA all day long. So
Okay.
so just kind of elementary, Roth and pre-tax, right? Those are the two types of ways the IRS treats an IRA and a 401k, right?
Okay.
Roth is not a type of retirement account. Roth is just how the IRS treats the retirement account. So you can have a Roth IRA, you can have a Roth solo 401k. You also can have a pre-tax IRA and a pre-tax 401k, right? So those are the two tax classifications that you have within a retirement account. Big difference between a Roth and pre-tax is, let's just say your son puts $5,000 just in a traditional IRA, a pre-tax IRA. Well, that $5,000, he doesn't have to report his income.
Yep.
He's actually going to get a tax break. So when he puts in, let's just say he made $50,000 working with you, selling houses, and he put 5,000 into an IRA. Now he's not having to pay taxes and claim 50,000 as income. He's going to claim 45,000 as income, right? So he's getting that tax break immediately. That 5,000 in the IRA now grows tax deferred. So he's not paying taxes on the gains over the years. However, he's kicking the can down the road, because
Yeah.
when he pulls the money out down the road, he'll pay taxes, right? So that's a pre-tax retirement account, like a traditional IRA.
And
The
most people do that, don't they? Because that's like
Yeah,
old school
yeah,
mentality.
most people do that. Roth, and I talk a lot about this a lot in my book. Roth is the opposite. When you put 5,000 into a Roth IRA, let's say your son did that, he's going to still have to pay taxes on that 5,000. So if he
Okay.
made 50K this year and he put five of it into a Roth IRA, he's claiming 50,000 as income still, right? So that income doesn't change. He's paying taxes on that 5K. However, that money now grows tax free. So he pays taxes on the seed, the
Up
5,000.
front.
But if that 5,000 grew to 20,000 over a period of time, now that 20,000 is 100% tax free. The harvest is tax free. So a good practice, especially when you're younger, is imagine if you're putting money in year after year after year after year into a
Right.
Roth IRA or a Roth solo 401k. It's not that unrealistic to have, seven figures in this account. And now that money is 100% tax free. And even if the government raises taxes, which we know they're doing now, and they're
Yep.
going to have to do a lot more down the road, because the government just keeps printing out money, they've
Right.
got to be able to collect this money back. And how
Yeah.
the IRS and how the government makes more money is they just increase the taxes. That's how they create more revenue, right? So a Roth account is a great way to, save and offset on the taxes.
Well, and just even talking to you right now. So I'm in real estate, of course. A deal I happened upon 2 days ago, basically. This lady's in a situation. She is about to lose her house and she owes very little. And so she's willing to sell for very little. It needs a lot of work. So I talked to a contractor last night, even, and I'm like, where are we at with repairs? Like, how much money do you really think it's going to take to turn this house around and for me to be able to get it on the market? And he's like, 30,000, maybe 40 if it needs a roof. I'm like, okay. So when I'm running numbers last night, talking to you, of course, now I'm thinking, Why am I going to put out all that cash if I don't have to? I can just borrow against my own IRA, right? It's short term. I only need it for like 90 days.
Yeah, and then there's no prepayment penalty if you were to use the loan feature and use this money to, repair the property. If you wanted to pay it back, within 90 days, like you said, there's no prepayment penalty. So now the money goes back into your solo 401k and, you could do it again.
Yep. And so when you look at like that, because I was thinking about it last night, it's like, why am I going to use cash that I got sitting around maybe when I already had a plan for that cash when I don't have to? And so your option is a whole nother ballgame for people that want to get involved, because there's things in real estate that happen all the time. There's deals that are dropped in our laps all the time. People don't take advantage of them because they don't really know how to do it and how to use the money.
Yeah, it's always good, right? For whether you're in real estate, whether you're an entrepreneur in a different
Yeah.
space, whether you're a 9 to 5 employee that is thinking bigger, you want to have options, right? Like you want to have more tools in your tool belt, and what our services entail and what we help people with is not the one all be all solution,
Yeah.
but it's a solution that is worth talking about, and it's just another tool in your tool belt.
Edward Jones is a big financial company, and there's a lot of financial companies like that. And I was talking to somebody about that the other day. It's like in my opinion, of course, this is only my opinion, I believe that they only tell you like the bare basics of things. They really don't guide you, not the people that I've talked to, into like you're talking about, how to do things smart with your money, how to make more money, how to put your money to work. They're kind of got that old school mentality. Let's put it here in the stock market and let's sit, and then we'll buy and sell as stocks move around. Your company, you're not Edward Jones. Can we talk a little bit about that so people understand the difference?
Yeah, I mean the main thing is just follow the money, right? Like these companies make money based off of you having money in the stock market,
Yep.
right? And one thing that we educate people on, and it was crazy. Actually, I was just talking to someone the other day, and it's a family member of mine, and she has statements to her IRA, and she's like, "Can you take a look at my IRA? I just don't think my account's doing that well." And we're looking through her account, and we see that she's paying like 1.5% a year in fees on her money, and she's making like 2 or 3% a year. And it makes no
Nothing.
sense because the stock market is up like 20% this year. I think a
Yeah.
monkey can make more than 3% a year in these times right now. So it was wild, right? So the financial advisor is just lazy, right? Like, how do you have a client? How do you justify you're making 1.5% a year and your client's making 3% a year? But these people have Edward Jones, and these big companies have just so many clients. Like they're just massive. People are
Yep.
just a number, and there's just a lot of people that fall through the cracks. They just look at the top line, right? Like how much money is under management, and
Yeah.
the more money under management, the more fees that they make, right? The more revenue they generate. Why would they want to teach you a way that would allow you to use the money to invest into a flip? Why would they
Yep.
want to teach you how to use the money to fund your business? They
Hmm.
make no money off of that.
No.
That's not their business model. If their business model was different, then it would be a different story. So,
Yeah.
like you said earlier, that's just the way the system has been designed over the years. But the good thing is more people are becoming more savvy. You've got these different platforms that allow more information to surface. So the good thing is there's more people, more conversations like this where more people can have those aha moments. And unfortunately, there are people that come to us where it's too late. I had a lady come to us where she actually took out $100,000 out of her IRA to invest into some kind of deal, like a Grant Cardone syndication deal. And she withdrew the 100,000, paid 30, 40,000 in penalties and taxes to
Wow.
make this deal happen. And when we explained everything to her, she's like, "Where were you 2 years ago?" Like, I
Oh,
asked my advisor how to do this, and he said he couldn't help me. And what I
oh,
ended up doing is just taking the distribution, and he told me not to do it. But I really love this real estate deal, so I did it anyways.
yep.
And stuff like that still stings. I
Oh,
still hear
yeah.
about it. So, hopefully if you're listening to this right now, we can help you before, you make that kind of choice that ends up costing you $10,000. And again, that's where knowledge is power.
I love that. Hey, let's talk about your book, because you guys, he's written a book. He's a best-selling author. Talk about your book, Daniel. What's the name of it? What was the purpose? And kind of guide them through that book, how it can help them.
Yeah, so it's called Blueprint to Your Best Retirement. And the book really was just me coming to a point where I realized I'm like, man, like we've got we're onto something here. We've got, about 1,000 customers in all 50 states. Everything that we do is over the phone, right? So I'm in Vegas. I might have 15 clients in Vegas. The rest are all over the country, literally in all
Right?
50 states. And everything we do is over the phone, right? A series of phone calls teaching people how all this works, right? So I'm like, man, I'd love a way where people can get the same information, maybe not as in depth, because a book is different. It's going to hit different than a 4 hour conversation spread out over 4 phone calls over a
For
month, right?
sure.
But what if there was a way for people to get the same information that has allowed us to help over 1,000 people that have accounts with us, and they could just read this book in less than a day and get the same kind of information, and it really helps them.
Yeah.
And that's the motivation behind the book. Is there's a lot of books out there that are really complicated. The financial space can be very intimidating. There's a lot of words that go over people's heads. A lot
Oh,
of
yeah.
people don't want to deal with finances because they've got too much else going on.
Yep.
But we know how important financial literacy is. So I wanted to create a book that was just easy to follow and wasn't overwhelming people and was easy to connect the dots. So I really dumbed it down where you can read the book in less than a day and walk away from it and take 1 or 2 steps to start seeing results. So I teach people about the solo 401k, how to access your retirement account penalty and tax free, how to make money tax free, going over some of those Roth strategies that we just described. So the book's been able to help a lot of people, and hopefully it can help more and more people and save people a lot of time and money and headache.
Big time. I know for me, like when I read financial books, like you just said, a lot of that stuff just goes right over my head because some of it can be intimidating and it's in depth. And it's like, if I don't follow this certain methodology, it's going to fail and I'm going to lose this money. People, and I know I've talked to you in depth quite a bit. So people can also reach out to you if they go through your book and need help. They should be reaching out to you for one to get advice like this.
Yeah, and best place to do that would be danielblue.me. That's my website. So it's Daniel Blue, BLUE, just like the color.me. If you visit that website, it gives you access to my book. My book's on Amazon. Again, it's called Blueprint to Your Best Retirement. It's got a link on my website. It also has a link to my podcast. My podcast is called How Winners Win. That podcast teaches people how to win in their personal life, their financial life, their entrepreneur life. So the podcast is on all the major platforms, Apple, Spotify, all that kind of fun stuff. And then also, if you have a 401k or an IRA and you're thinking, well, shoot, I had no idea I could touch this money penalty and tax free. I want to learn more. There's some information on the website where it just allows you to input some of your information where someone from my team can reach out to you and help you see if this is an option that could benefit you.
Big time. And so as we're coming to a close for 2022, I always like to kind of think of strategies and what can we do? Because I know the last 2 years have just been insane since COVID. And I don't know, like the economists all project 2022 is going to be awesome. I totally believe that it is. What would you say when you're looking at financial things and people where they should be putting their money? What kind of pro tips could you give somebody?
I would, if you're, so I'm speaking to someone that is an entrepreneur that has earned income through their business and they don't have any W-2 employees, really consider the contribution limits of a solo 401k. You can contribute up to $58,000 per year into this plan.
That's
And you also can have your spouse on the plan. And if she makes enough money, then she can contribute up to $58,000. So theoretically, combined, you guys can contribute over $100,000 into this plan. But again, it's based off of income that comes in from the business. So you do have to have some income coming in through the business. But that being said, if you could put a good chunk of that money into a Roth solo 401k, that's a shortcut, right? I mean,
big
you
time.
can have you put in $50,000 a year for 5 years straight, and that's $250,000. It's a good chunk of money that you can deploy compound interest. It's not that unrealistic to amass a
No.
million dollars within a reasonable time frame. But again, it doesn't have to be 50,000. It could be someone like your son, putting
Yep.
$3,000 a year every year into a Roth IRA. Like if you start and you just keep doing it consistently, just like exercising, just like eating good, you start having those decisions compound and you start seeing results there too.
Oh, yeah. I love it. You guys, y'all need to reach out to him, number one, because he's so smart about this stuff and it really makes you think, because making money is hard and you can lose it just like that in the stock market. It can be gone in an instant. And so this is just another methodology on how to build wealth and how to do things strategically with your money and be in more control over it. So I'm super thankful that you were here today, Daniel. Thank you so much.
Yeah, it was a pleasure. Thank you for having me, Trisha.
Yeah. Give him one more time how to get a hold of you, please.
Yeah, it's danielblue.me. It's Daniel, Daniel, then blue, just like the color. That is my real name. It's not a stage name or acting name. So it's danielblue.me. And all my social media handles are on there as well. I stay pretty consistent on Facebook and Instagram. So
Yeah.
you will not be disappointed if you follow me there.
Definitely not. You guys have an awesome day. We'll see y'all later.